Hello and welcome to Bloomberg Quint, and this is the market wrap for you guys. Well, we have seen the Nifty decline by over 1%, closing at 8,500. Your Bloomberg Quint question of the day, that is the poll of the day, was whether or not we will hold 8550, and 42% of you had said no, we will not, and the 42% of you are right. But I am also in conversation with Gaurang Shah of Geojit BNP Paribas, and he's going to tell us a lot more about the direction of the markets. So, Gaurang, my first question will have to do with the decline that we've seen in the markets. What's the reason behind the volatility that we've seen right now?
Well, you speak of the devil and it's there, lurking at the horizon, the US presidential election. That's point number one. Point number two, you have the Fed meet outcome by late this evening. And of course, you have the sell side figure from the FIs as far as our markets are concerned. So we are caught between these three negativities, and my sense is that since we have broken certain crucial levels of 8550, which we were maintaining those sanity levels up till now, but we have kept the 8500 spot Nifty level intact today, despite the kind of correction. So my sense is that till the time we have clarity on 9th of November of the US presidential election outcome, we are going to see these kind of choppiness and volatility. But at the same time, in the same breath, I would like to say that these are great opportunities for people to come and get invested and look at earnings visibility and growth and then get invested.
Okay, so you spoke about 2 points on which my next question will be. First is, of course, the FOMC meet, and second one is the impending US presidential elections, and to a certain extent, they might just be related. So, as far as today is concerned, we are not expecting any change. But with the potential outcome, now once again, I believe that Hillary's taken the lead once again. With that outcome, what do you see can happen in the December Fed meet?
So I think first of all, you are going to have a lot of opinion polls coming out, and you will get all sorts of numbers. And the fact still remains that despite those numbers coming out, the margin of error is very, very small. Just a single 3% to 5%, the difference between the vote. My sense is that on the US Fed, yes, Janet Yellen would possibly pause and wait and see the outcome of the election. And depending upon who wins the election, the move will be dependent. I have been saying this for a long while that I don't expect any rate change at least till year end December 2016. And in case if Fed has to move, it will be only in Jan, Feb, March 2017. That too keeping in mind the impact of Brexit and the outcome of certain Eurozone countries which are going in for referendum as well.
Right. So watch out, guys. We're possibly not even looking at a Fed rate hike even in December. Now, as far as today's markets go, with respect to our indices and its futures, we have seen some more shorts adding into the system, especially with respect to the Nifty and the Nifty Bank. And as expected, the volatility index has also moved up by as much as nearly 7%, but not yet hit 17, at least as far as the closing basis is concerned. So moving on, my next question will have to do with the current earnings season and how you read that so far.
So up until now, I don't think there is any great disappointment. But again, you have to see sectorally, and within those sectors, companies delivering the numbers. My sense is cement has done very good, and they are likely to do better with the kind of consumption theme that we are looking at, government, private, PPP, etc. We're quite positive on auto numbers, which came out month on month, as well as the numbers delivered by the two-wheeler, four-wheeler companies in the auto pack, certain private sector banks, despite Axis Bank coming out with certain disappointment of numbers. FMCG company with the tailwind of good monsoon and the demand from semi-urban and rural India going up. We are looking at this sector as well, and this is just the tailwind, beginning of the good times for some of the companies. And possibly, especially for the cement sector, we had a fantastic monsoon after 2 years. So the month or the earnings gone by was just after the monsoon season. Now they have a clean and clear 3 months, three quarters, that is 9 months of earnings visibility and consumption theme going up. So I'm quite sure that cement will be an outperforming sector.
So before I come back to talking about sectors and stocks, there's just one more question with respect to the macros of the market, and that will be the FII flows. We have seen an outflow in the past 3 weeks. How much do you think is this got to do with your ongoing US presidential elections and your FOMC meet, and how much of this has to do with FIIs genuinely pulling money out because of potential volatility?
So I would say a large part of the sell side figure is because of the US presidential election and the uncertainty as to who's going to win. In terms of US Fed, well, quite sure nothing will be done today, tomorrow, post the outcome. December, again, like I said, depending who will win, and I'm not too positive on any move as far as the December rate hike is concerned. In terms of the negativity, in terms of numbers coming by, I think FIs would only want to increase the cash position given the kind of uncertainty that they have.
Right.
And I don't see this as a huge, sell side number as a permanent feature.
Right.
You have days of good numbers, you have days of bad numbers. Overall, if you look at the Indian macros, I think we are quite well placed. Okay. We are lower down, top down on the interest rates. We are seeing an earnings season bottoming out and improvement going forward from here on.
Right.
And the implementation of GST, which is going to be a big trigger if it gets implemented by 1st April 2017. So, and many more policies to come by. So, this is one market that you cannot ignore.
Okay. So, an outside chance that Donald Trump is elected president.
Yeah.
Okay. I mean, first of all, do you expect volatility? And if you do expect volatility, will that be an opportunity to buy into the markets?
Well, if I see this as an opportunity, I would definitely see that as a bigger opportunity to go and invest into the equity market from a longer term point of view.
Right.
And we in India should know better, to be very honest, because we've seen so many elections at center level, state level.
Yeah.
Politicians say something else, and once they are elected, they do absolutely nothing.
Right.
So I hope he falls in the same category.
Yes.
That's I keep my fingers crossed. But yes, it would be a knee-jerk reaction if he wins, and that would be a great opportunity.
All right. So, with respect to sectors, Gaurang's already spoken about auto, cement and FMCG. In these three sectors, would you like to tell us about some picks that you really like to go ahead and buy?
So I think in the cement that I am quite positive on, all the three big names, ACC, Ultratech and Ambuja, they feature in our positive universe. We have mid-cap names like Mangalam, JK Lakshmi Cement, Ramco Cement, India Cement.
Right.
In the private sector banks, starting with Axis Bank, which did not do well because of the provisioning issue on the GNPL front. We are positive on that. ICICI Bank, which has not yet come out of the numbers, I believe next week sometime they come out of the numbers.
Right.
HDFC Bank, we already seen the numbers. IndusInd Yes Bank has been a consistent performer over a longer period of time. A smaller bank like a DCB, we are quite positive on, and a new kid on the block, RBL Bank Limited, has done phenomenally well for post-listing, and I think there is great scope for this particular bank to grow as well.
Right.
These are some of the names in the private sector bank universe. In the public sector bank, we like State Bank of India, Bank of Baroda and Andhra Bank along with Union Bank of India. These are some of the picks in the banking, cement and FMCG. We are quite optimistic on mid-cap names like Dabur, Marico, GP, Godrej Consumer Products Limited and Imami.
So on that I have a question. Well, at least the consensus is of the belief that the valuations in the FMCG are trading. They're trading at lofty, valuations. Sure. But you don't think that should be a problem going ahead?
So along with valuation, you have one more fear from Patanjali and Baba Ramdev, which is a big competition. But my sense is that especially some of the mid-cap companies like Dabur, which did phenomenally well as far as the numbers. I think last week we only saw the numbers. Great numbers going into herbal and Ayurveda product, and they've got years of experience being in this market. Right. My sense is that competition will definitely be there, but there will be equal opportunity for newer product launches.
Right.
Earnings will improve, expensive will come to valuation which are reasonable as price corrections takes place, which we expect with the kind of market which is, that will be a great opportunity.
Right. And finally, anything that you'd like to avoid in this market?
So would avoid metals, though it has done a phenomenal run over the last couple of weeks and days, but I'm not too sure about the great danger from China as far as anti-dumping is concerned, and India was pulled out for certain anti-dumping duty issues. So metal is something that I'll avoid, and real estate, some of the lesser known names with corporate governance, I think that's absolute no-no. So these are two pockets that I would avoid.
Okay, Gaurang, thanks for joining us.
Thank you.
And as for you guys, well, thanks again for joining us, and you guys can come back and tune in to Bloomberg Fin for yet another edition of Market Wrap. Till then, it's goodbye.